Tension is escalating between the U.S. and China. China saying that it's ready to launch countermeasures against the U.S. if the U.S. does, in fact, go through with their plan to block chip shipments to Huawei. We have Dan Howley here to break this story down for us. And Dan, I mean, you don't have to look any further than some of the chip stocks today under a tremendous amount of pressure. Qualcomm alone off just around 4.5%. What do we know at this point? And then the potential impact this could have on some of the biggest U.S. chip names.
Yeah, so this is essentially the U.S. trying to crack down further on Huawei, and they said that this is a means to close a loophole. Essentially, what it does is it says that if there's a foreign firm that is producing chips for Huawei and they're using U.S. technology to produce those chips, they need to get a license from the Commerce Department, and that could significantly impact Huawei going forward. Again, the Commerce Department saying that there was the previous rules allowed for loopholes that let foreign companies still produce these chips using U.S. technology and then send them over to Huawei. This is really a means to further hammer that company and really put a dent in them. And really, this is going back to the U.S. saying that Huawei is a security threat. They say that it has the capabilities or could potentially have the capabilities to spy on individuals, spy on countries. That's why the U.S. isn't allowing Huawei 5G infrastructure to be built here, although there have been some little talks about whether or not smaller carriers may be able to use some Huawei technologies in the future. But this is going to be a big issue. And China is hitting back, or they say they would hit back if this continues to go forward. There's a 120-day grace period for these licenses to have to be put forward. But China's saying, look, if this is how you guys want to play ball, we're going to go after your companies, including Apple, Qualcomm. We looked at Boeing and Cisco. Those could all be on a potential entity list for China that would then need to be investigated on their end of things. So obviously this is ratcheting up tensions, and you're seeing these stocks react as a result.
So, Dan, that's not the only story that's really moving some of these tech stocks today. I mean, we talk about the impact that the trade war or the escalating tensions really between the U.S. and China is having a lot of these names. Coronavirus is also having an impact here. We got new data out from Foxconn. We know that that's Apple's biggest supplier, reported a 90% drop in profit from a year ago. Dan, what's your take on this? And is this indicative at all to what we could see from Apple moving forward?
I think for Apple, it's interesting. Obviously, Apple is Foxconn's largest client, but they also have other tech clients as well. But for Apple, we saw the recent earnings, smartphone sales, big drop just because people couldn't get to the store or they were nervous about making purchases while the economy started to shutter. That was buoyed, though, by the services department that they have. That includes things like Apple TV, Apple Music. They were hit significantly in the Apple Care department. That's where they sell kind of warranties to customers and things along those lines. But I think Apple was fared better than we expected. Moving forward, though, we could see a drop this coming quarter, and Apple didn't really give us guidance as to what's going to happen in the coming quarter. But a lot of expectation points to perhaps a delay in the new iPhone that's supposed to come out in September, the 5G version.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.